This is Austin Real Estate Investing. Austin Real Estate Investing. We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
Hi, this is Jordan Moorhead with the Moorhead team, and this is the Austin Real Estate Investing Podcast. Today we have Phil Delgado on here. He's a Texas insurance broker, and he's going to tell you all about how to get insurance in Texas, what to avoid with insurance in Texas, and how you can be properly insured as a real estate investor. Hey, Phil, how are you?
Good, Jordan. How are you doing?
Good to see you, man. I know we've talked on the phone probably 20, 30 times. You insure all my properties and you've done a great job for me. So I just wanted to have you on and share your experience with our guests today.
Sure, Jordan. Appreciate it. Appreciate you sharing your audience with me, giving me the opportunity to share a little bit about investment, property insurance, the different varieties, the what to look for, what to watch out for, common mistakes. And so absolutely every month there's an opportunity where we have to educate an investor or a realtor or a hard money lender on some of the most basic concepts of insurance, like replacement cost versus actual cash value. So and that's a good starting point, to be honest with you, because I know there's different types of investments. There's the purchase, hold, and lease out with minimal remodeling, renovation, kind of like your paint, your carpet, your flooring, and then get that property income generating ASAP. So you bought it in good condition. And then of course there's there's what folks are misled to believe. The only other option is a builder's risk policy, or a builder's risk type risk is what we call it in the insurance industry. It's a risk. A home is called a risk. So that's a good starting point. The difference between actual cash value and replacement cost. Thanks, brother. So replacement cost means that an insurance company in the event of a loss, including a total loss, will pay you or the insured, the investor, out the value to rebuild or replace that property. Right. So that's what we want. That's what we want on the traditional real estate transaction. And if we can get that for our investment properties, that's what we want as well. The other type of coverage or loss settlement, what we call it in the insurance industry, is ACV, or actual cash value. So imagine this. We see it a lot. We see it a lot on our roofs. Here in Texas, in Central Texas, there's a lot of hail damage. It's the number one cause of claims in Texas. And a lot of people don't know that while their home might be covered at replacement cost, their roof can be on an actual cash value schedule payment, which means before that insurance company pays out to replace that roof, they're going to depreciate for the age of that roof. 20-year roof, a roof with 20-year-old shingles that's 10 years old and costs $10,000 to replace. If it's covered at actual cash value, they're going to deduct 50% of the value from that roof before they pay out. And then they're going to take the deductible out of that. So that $20,000, that $20,000 roof is going to be depreciated by $10,000 because of the age of the roof. So that's called actual cash value. So how that applies to investors. Insurance agents love to sell builder's risk policies. Why? Because they're easy to issue. They're fast to quote. They're affordable. $400, $500, $600, $700 will insure an investment property for 6, 9, or 12 months. Now, here's the challenge. A builder's risk policy is an actual cash value policy for the existing structure. Okay. When you put money into renovating and remodeling it, the improvements are covered at replacement cost. So that's great. The challenge is a lot of investors nowadays are buying homes that they could literally turn around and resell on the retail real estate market because they're not in bad shape. But hard money lenders have partners who are selling builder's risk policies on these homes. And if the house is in good shape to begin with, then then you might be buying a home for $120,000 and putting $20,000 of improvements into it. Okay. Well, that original $120,000 investment on a builder's risk policy is covered at actual cash value, pennies on the dollar. This house was built in 1970. That house is now depreciated by 50 years. So that's the downside to using a builder's risk policy for a property that has significant value. It's in moderate to good shape. That property has value, but it's being covered at actual cash value. So you say, well, great, Phil. What do you use to protect Jordan's investments that are similar in nature? Well, we're going to use a vacant dwelling policy. So a vacant dwelling policy allows for vacancy, and it also allows for some improvements, but it's going to cover the existing structure at replacement cost. It's going to be more expensive than a builder's risk policy, which is why insurance agents don't sell them. They're in it for easy sales, quick sales. I'll sell you a quick builder's risk policy, make some money, takes me 10 minutes to quote, and now I can take the wife to dinner tonight. The challenge is if that house burns to the ground a day after closing, that structure that has not been improved yet is covered at actual cash value, pennies on the dollar. So we want to use a replacement cost policy on the majority of investments that come across my desk, because it covers the building at replacement cost. Now, here's the thing. An investor might say, well, Phil, that policy costs $1,800 a year. Remember, we're only holding that property for 4 months, 5 months, or 6 months. So don't look at the annual premium. You're going to get a refund for any earned premium when you sell that house and cancel that policy. Make sense?
Sure. So basically what you're saying here is a lot of people borrowing through a hard money lender, or just getting these builders policies that don't really cover so much. So if there's damage to their home while they are fixing it up to flip, let's say, they're not really getting a whole lot. Whereas when you're buying a rental property, you want to get replacement cost where you can totally rebuild the property to meet those specs as the property is right now. Absolutely.
I mean, that you can't, absolutely, because there's no telling at what point you're going to suffer that total loss. Is it going to be after you've already finished remodeling it and you put the for sale sign on there? Or again, is it a week after you close on it at the county courthouse and you haven't even put $1 of improvements into it and you suffer a total loss? Well, that loss is going to be paid out at actual cash value because that existing structure is ACV. So definitely. Now, here's the crazy thing is hard money lenders and even retail lenders don't understand insurance. So your hard money lenders are recommending builder's risk policies for every transaction. And I don't know if it's because they have someone that gives them gift cards, every policy they refer to them, or it's their cousin or whatever, but hard money lenders are recommending builder's risk policies. They don't even know that the policies that they are demanding their investment be secured with are actual cash value policies. I arm wrestle all the time with lenders, not only in the retail market, because now in Austin, you're buying an investment, we can talk about this in a second. We'll segue to it, but this is a foreshadowing. Jordan buys a home. It's a duplex, 1,800 square feet. There's no way that house is going to cost more than $200 a square foot to rebuild. Most likely it'll cost about $175, $200 a square foot, 1,800 square feet. So we're going to insure it for $180,000 plus $45.90, $135. So that's $315. Well, because the resale market is so crazy, your lenders are telling buyers that their insurance policy has to cover the loan amount. Well, due to supply and demand, due to the value of land, which insurance doesn't cover, people are being forced to buy too much insurance for these properties. So we're constantly educating lenders on the difference between market value and replacement costs. Market value is based on supply and demand. It includes the land. Replacement cost is only concerned with the cost to rebuild this structure, bricks, boards, mortar, etc. That's fine. We do that battle all the time. But now we're having to educate lenders, hard money lenders, on the difference between builder's risk and replacement cost policies, and they will literally prefer a builder's risk policy over a replacement cost policy, because that little form that they send out to the investor that has all the stipulations of the policy, 6 months loss of rents, vacancy clause, it literally says builder's risk policy on there. So it's important that we educate investors so they can stand up for themselves, because here's what's going to happen. They're going to have to pay that loan out, that hard money loan. They're going to have to pay that back, regardless of how much money the insurance company pays out for that depreciated property. That lender's not going to step up to the plate, admit their mistake, and fill in the void when that insurance company doesn't pay out loan amount. They're not going to do it. So that's why we're educating investors and buyers so they can stand up for themselves and buy the proper policy.
I like a couple of things you said. So for one thing, when you're doing a rehab, I think your property's at a higher risk than if it's just normally operating. So rental property, let's say I buy a rental property, I have people go into rehab the rental property. If a fire or anything like that is going to happen, it's a higher risk. It's going to happen during that time. So if it gets burnt down during that time, I don't have replacement cost value. If I have a builder's risk policy, I'm in trouble. But, like you said, too, with, let's say I buy a duplex for $500,000 in Austin. That doesn't mean I need to insure it for $500,000. It's not going to cost $500,000 to replace it. You mentioned this, but let's just say, for instance, the land's worth $200,000.
Exactly.
You need to insure the duplex what it costs to rebuild. So I think you threw out a number, maybe 320. Let's say it costs 320 to rebuild it. I still have the land. You can't burn land away. So no matter what happens, the land is there. I need to be able to rebuild the structure to the specs it was rebuilt before. So I really like that too. I don't think a lot of people think about that as say, oh, I just bought this for $500,000. They're saying I'm only insured for $320,000. And with a little education, it's easy to understand that you're only insured for the amount the structure costs to rebuild. You don't have to do anything about the land. And people are easy to forget that.
Have you wanted to be part of GoBundance, the tribe of millionaires, but just haven't hit that millionaire status yet? Well, now you can, not even being a millionaire, by joining our new program, GoBundance Emerge. My name's Jamie Gruber, creator of GoBundance Emerge and member of the GoBundance community. And now you can join. GoBundance.com/emerge, GoBundance.com/emerge. Use code Jordan for $100 off this 12-week goal-setting program and mastermind that'll propel you to being a whole life millionaire.
Right. And here's the kicker, right? The kicker is this. It's not a lottery ticket you're buying. So when your property burns down, the insurance company is not just going to cut a check for $500,000. Yeah. Let's go back to the roof situation. Nowadays, in the old days, people used to be able to get a $15,000 check to replace their roof and then decide whether they would really want to replace it or not. That doesn't happen anymore. What happens today, and this is the way it would happen with a total loss on an investment property. The insurance company, let's go back to the roof. Okay, fine. Roof costs $15,000 to replace. What's going to happen is this: the insurance company is going to cut a check to the homeowner for $7,500. That's recoverable. That's depreciated value of that roof, and then the homeowner is going to have to replace the roof and then send a completed invoice, paid invoice, or a completed work order to the insurance company to get the other half of that money delivered, right? So let's just say a roof costs $15,000 to replace, but let's say there was such a thing as roof coverage on a homeowner's policy, and they bought $30,000 worth of roof coverage, and then they needed a roof replacement. The insurance company is not going to cut them a check for $30,000. They're going to cut them a check for the $7,500. After completion, they're going to release the final $7,500 of recoverable depreciation. So going back to this investment property that the mortgage company or the hard money lender is forcing you to buy $500,000 worth of insurance for. So you're paying for an extra $180,000 of premium. That house burns down. The insurance company is going to pay to rebuild that house, and they're going to match the work orders and contractor invoices. And when it doesn't add up to $500,000, you're going to be like, well, where's my $500,000? They're going to be like, sir, we already restored you to where you were before the loss. That's what insurance is for. You cannot profit or benefit from insurance. They're only going to restore you. So if that property doesn't cost over 320 to rebuild, don't pay more for insurance because you're wasting your money. You're not going to get that extra $180,000. It's not the lottery.
Sure. And I think that's a great point too. A lot of people, it's easy to think, oh, it's insured for this, I'm going to get this.
Yeah.
It's not an insurance company's job to just give you as much as they can. They want to spend as little as they can. And it's important to remember that anytime you deal with them, they're going to do whatever they can to spend as little as possible. So
absolutely.
I think that you make a great point there with insurance. And if you're an investor listening, talk to somebody like Phil, figure out how much insurance you actually need. Don't talk to your lender. Your lender's not an insurance broker. They don't understand this. Phil wants to take care of you. He wants to make sure you're taken care of at the most affordable rate you can get. So, that being said, Phil, you've already talked about a few things that it's easy to overlook and mistakes can be made, but what are some of the biggest mistakes you see investors make outside of getting the wrong policy and over-insuring their property?
Great question. So investors, the biggest thing an investor can do wrong is to not be honest with their insurance agent, right? If that property is going to be vacant for 3 months, let your insurance agent know. So that way they write you a policy that allows for vacancy. Most traditional landlord tenant occupied policies only allow for 30 or 60 days of vacancy. Mostly it's 30 days. One second. Okay. Mostly it's 30 days. So what happens is, now, why would they do that? Because a vacant dwelling policy is a bit more expensive. So they're going to try and save a few bucks, go with the traditional tenant occupied policy. 62 days in, the house has been vacant. They suffer a loss. The insurance company sends an adjuster out there, asks questions about the neighbors, sees that it's been listed on the market. And now that contract, it is an ineligible risk and you might not get paid out. So not being honest with your insurance agent. You got to find an insurance agent that you can be honest with and that has tools and resources to help you in whatever actual use you're going to use for your property. Another mistake, not anticipating the actual and proper length of reconstruction or remodeling, right? A builder's risk policy, if that's the proper policy, is a 6 month. It's called a one-shot policy for 6 months, 9 months, or 12 months. Well, the longer the term, the more expensive the policy. So someone says, I just want the 6 month, but then the rehab takes longer than 6 months. Well, these builders risk policies aren't automatically renewable or extendable. So then they're going to be in a situation where they have to find another policy that could be more expensive, or they could go without coverage. So that's another mistake that I see, is not being realistic about the time it's going to take to complete the remodel, rehab, or resale of the property. Going without proper coverage, right? Replacement costs and actual cash value, we talked about that. But what about water coverages, right? How old is this home? What type of plumbing improvements have been done or haven't been done? Because not all investors are going to turn around and flip, and they're not all vacant. I mean, we do some business together where you already have rental income and you're buying a property and you might house hack on one side and rent out the other side. So it's not vacant. You still need a good insurance policy, just like a homeowner would need water coverage for a sudden and accidental discharge of water backup, meaning backup of sewers and drains. The plumbing system backs up, your commodes back up. Water foundation, which covers the cost to access the pipes that are in your foundation if they should leak. Water seepage, right? A slow leak that you're not going to notice for 3, 4, or 5 weeks. And if you have a tenant in there, they don't give a damn about any water leak. They're busy and it's not their house. So these are water coverages that most insurance companies don't offer on a landlord policy or a tenant occupied policy. But as a broker, I do have resources to offer those types of coverage. So, and when you work with a broker, you're going to get those coverages for an affordable price. So a good answer is people who are just looking for the cheapest policy are just asking for trouble. You don't have to sacrifice coverage to get an affordable insurance policy. So that's a big mistake that I see people make. So not being honest with your insurance agent, trying to skimp on the coverage when an extra $10 a month might save you thousands of dollars. Pass that cost on to the renter right now. With this housing market, there's no reason that you can't pass quality insurance costs on to your tenant. There's just absolutely no reason to do that. Yeah.
And with I don't know, with all my tenants too, I require that they at least have renter's insurance to cover their belongings in the home. So I don't want to even talk about that. I say, hey, you need to get renter's insurance. Needs to cover up to X amount. I want to say we say 100,000 in renter's insurance, and that just mitigates our risk even more.
Yeah. So here's what Jordan's talking about. We're talking about number one, absolutely, you want to tell them to get renter's insurance for their contents, but also that $100,000 is referring to the liability coverage, right? Someone slips and falls at that house, they're going to turn around and an attorney's going to number one, sue the person who is the occupier of that home, the whose primary residence it is. If someone's renting, that's their primary residence. So a lawyer is going to attack that person who's maintaining that property. Well, they're also going to search the tax records and see who the owner of that rental home is. And now they're going to try and potentially come after the investor or property owner. So you always want your tenant to have the first line of liability that's going to be exhausted before a lawyer comes after you. So absolutely, Jordan, any investor needs to require that their tenants have renters insurance, and that liability, I would encourage everyone to all the apartment complexes in Texas ask for $100,000 worth of liability, but believe it or not, the difference between $100,000 and the next level up, which is $300,000, is probably $15 a year, about $1.25 a month. So as investors, let's increase our liability requirements to $300,000. No one's going to complain, and it's going to give you a little bit of extra protection if you ever do get sued. If your tenant does something stupid, then they have another $200,000 worth of coverage to pay out before that lawyer starts coming after everyone else down the chain. Okay,
that's awesome advice. I had not thought of that myself, and I think everybody listening, if you require renter's insurance, which you should, start requiring more, and then we'll all be protected. And then if something absolutely ever happens, it's not on you, and that's the most important thing. Everybody wants to mitigate risk.
Hey guys, this is Jordan Moorhead here, and I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
Yeah, for sure. Let me mention one other thing real quick, Jordan. Mm-hmm. As an investor, you need to have a list when it gets to the section of your contract or lease to talking about pets. We need to have a list of ineligible dog breeds. Mm-hmm. Dogs that you just don't want in your house. Pit bulls, Rottweilers. I know that the challenge is, well, what? Dang, man, I need someone to pay. My tenant is going to pay my mortgage. I need someone in there. Man, there's plenty of people out there without vicious breed dogs that will rent your property. I hate to say don't allow folks who own pit bulls and Rottweilers, but there's a reason why insurance companies don't cover those breeds, and so have language in your agreement that says what breeds are not acceptable. And if you don't know what breeds those are, contact us at Goosehead Insurance, the Phil Delgado Agency, and we'll share a list of vicious breed dogs that are typically excluded on a renter's policy. So if that renter's policy doesn't cover it, then they're going to come after you because that insurance company is not going to pay out that $100,000 or $300,000. And then they're going to say, well, did you ask your tenants? Let's look at that at least. Did you tell them that these types of dogs weren't allowed? Well, no, you didn't. So you allowed it. Now you're negligent. So that's another a layer of protection that you can surround yourself with. Is there any type of bulletproof vest that'll protect you against every single scenario? Well, no, but at least you can do the things to strengthen your position that don't cost you anything. And man, at least you can rest knowing that you've done everything you can. So that's another thing to think about.
Yeah, that's awesome. And we'll put his info in the show notes here, and we'll talk about it here in just a second for anybody who wants to reach out to Phil about insurance in Texas area. Phil, are you guys just in Texas?
Yep. So I write from the north, south, east, west. What's that? The Red River, the Rio Grande. I don't know what's on the east, but yeah, we write border to border. Now, I do have partners. I'm a Goosehead insurance agent, right? Mm-hmm. So I have a Goosehead franchise. Goosehead is in over 25 states in the union. So if you have investment properties outside of Texas, I have partners outside of Texas who will write your risks outside of Texas, and they're accountable to me because I refer them, the business. So if they want me to keep referring them opportunities, then they have to provide the same level of care and coverage that I supply my clients here in Texas. So that's kind of a good way to go about it.
Awesome. Real quick, Phil, when we wrap up here, we like to ask a couple questions. What is your favorite business or mindset book that you like to give to other people?
Great question. So there's a book from Gary Voss. It's called Never Split the Difference. Chris Voss. I'm sorry.
Chris Voss. Yeah. Great book. Absolutely love Never Split the Difference.
I've read it. I read it twice. There's not too many books that I'll read twice, but it's pretty deep. And if you can I'll be honest with you, I've had interactions to this day where I said, "Damn it, I didn't utilize the exercises, the tools and principles in that book." Mirroring, but it's absolutely a mind shift, and it's absolutely amazing. So that takes you on a whole nother level. It's about negotiation and influencing people. I've incorporated it in my business in terms of earning trust. The section on earning trust as real estate professionals, our number one goal should be to earn someone's trust, because if we have their trust, then we have control of the transaction and we can exercise influence. Now, if you're a person of integrity and you have resources, it's your duty to exercise influence and control the transaction. So there's absolutely nothing wrong. Some people think of it negatively in terms of influencing, controlling the transaction. But if you are a person of integrity and you have resources to help the public, then it's almost your duty to exercise influence and to take them, lead them towards the finish line in the right direction. So, yeah. So Chris Voss, man, that's a tremendous book. Now, for people who have teams, it's an older book that I read, and it's called The Servant. So it's about the difference between power and authority. A lot of people will expect people to run through a wall for them because they told them to. And the goal is to get people to want to run through a wall for you. So there's a book called The Servant. I can't remember the author right now, but for people who lead and manage and are in the team environment, The Servant is an amazing book. That's a lot easier read than Never Split the Difference.
Yeah, I've heard of The Servant, but I have not read it. And I can't remember who did it either.
Yeah.
We'll look that up and we'll put that in the show notes here. What is the best way to get a hold of y'all, Phil?
So the best way to get a hold of us is call our main number. It's 210-899-3800. That's 210-899-3800. You're going to get my automatic. You're gonna get a call, and it's gonna say, if you're an existing client, push 0. If you're calling for a new business quote with Phil, press 1. Jessica, my wife, press 2. But the great thing about that is it goes to my cell phone no matter where I'm at. So it's our phone system, and it goes, of course, to my pocket. So 210-899-3800. Our email address is Phil, PHIL.Delgado, DELGADO @goosehead.com. So Phil.Delgado @goosehead.com. You can find us on Facebook, Goosehead Insurance -- Phil Delgado Agency. LinkedIn, Phil Delgado. And really what we're all about is serving people. So, man, we got connected many years ago, Jordan, and I think you've kind of, and I think James Mosley. See, I know all my business partners now. We're the number 6. We're the number 6 goosehead agency in the country, only because we work harder than everyone else and we serve with more tenacity. But that's what we're really about. So anybody who's looking to partner with someone who has a genuine care and interest for their clients, their business partners, that's what we're all about. That's the type of value match that we're looking for. Someone who understands that the dollars will come if you serve and add enough value. And it's a daily battle, man. It's a challenge, but we love doing it. I just finished. I'm here at an establishment here in San Antonio. Realtors who've been in the business less than a year, so partner with a lender and a panel of top realtors here in San Antonio who answered over 20 questions from newer agents. So this type of stuff we do, man. It's just about adding value, and if we help enough people, it's not going to be for everybody, but 50% of the realtors and lenders out there want to work with someone who actually cares about the client. It's not always about the transaction and the dollar. So that's how we separate ourselves, and that's what the Phil Delgado difference is all about.
Yep, and that's why we use you. That's why I use you, because you guys are always there to help. So I love it.
Cool.
Thank you so much for coming on here today, Phil. Again, anybody needs anything from Phil, the Phil Delgado Agency, we'll put his contact information here in the show notes so you guys will be able to reach out. But if you need anything, always reach out to me. I can connect you with Phil if you can't find the show notes or you can't find any of the information. I love to help people out there. Reach out to us at the Moorhead team and we'll help you find Phil.
Awesome. Hook 'em horns.
All right. Thanks, Phil.
All right, brother. We'll talk to you later.
Bye.